Have you ever wondered whether a company that occupies its own premises, like a school, a hospital, or a manufacturing firm, is it supposed to recognize rent income in their financial statements, in their books of accounts? Have you ever wondered whether a company that occupies its own premises, is it supposed to recognize rent expense in its financial statements and books of accounts? In fact, if this company had rented a premises, automatically it would have been required to recognize rent expense in their books of accounts. But now, the situation is a bit different. This time around, it has built its own premises and it occupies these premises. It seems like a harmless expense to deduct and to consider when a company occupies its own building. However, even though that expense would go and help in a big way this company in reducing the taxable profits, it is not a good idea for a company to do that. Remember, taxes are payable on the profits of the company. And how do you arrive at profits? Is you deduct all expenses from the income and incomes of the company so that you arrive at the taxable profits. And now you are wondering, since I own this building, is it a bad idea for me to deduct and assume there is a rent to these premises and deduct it? It is wrong. And whenever you do that, KRA is not happy with you. And finally, in one way or the other, they will catch up with you. And when they do that, it will be a matter of penalties, fines, and interest coming your way. So what is wrong with you deducting an expense as rent expense for a building that you own and occupy? You are not allowed by KRA. Then does it mean it is a better idea you just leave your premise, you go rent elsewhere, so that rent that you'll be paying there will be recognized by KRA? And as a matter of fact, your own premises, you can rent it to another business which will be giving you money. Why is KRA just creating trouble and complicating this whole process of telling you that if you occupy your own building, then don't recognize rent as an expense? These are the reasons. Number one is that, do we have an external landlord? No, we don't have an external landlord, because in this case, you are paying to yourself. So the question number two that KRA wants to know, is this money that you are considering as an expense to your company, is it actually leaving your bank account? If there's no money that is getting outside your company, there is no cash outflow, why is it then you want to recognize it as an expense? And number three, do you have a recipient of this money? Every transaction has two sides. It is a cost to one party and it is an income to another party. For instance, if a company pays salaries, it incurs a cost, but employees are the recipients of that money. And to them, it is an income that they declare to KRA and pay some taxes on. If you go with your car, a company car, to fuel it in the petrol station, it is a cost to you, but that cost is an income to the petrol station owner. Think of airtime, think of utilities like electricity and water. Those are costs to the company, but those costs are incomes to other people, and they end up paying for taxes for those incomes. Now, let me push further, because maybe some of us are still not convinced that you should not recognize a rent expense for a building that you own and occupy. It is not very clear. Even for me, it's a bit off, but let me try to convince you that an asset is an asset. It doesn't matter how big it is, whether a small one or a big one. This is my point. This company, your company owns laptops, computers, electronics, furniture, vehicles. So every other time the company uses its vehicle, does it pay or charge or recognize some hiring fee for using that vehicle? If a company has a machine, ordinarily, if it had not bought that machine, it would have hired a machine. But now it has this machine in its premises. Does it then consider or deduct or recognize a hiring expense fee for using that machine that it already owns? If it doesn't charge for the car it owns, for the electronics that it owns, for the furniture that it owns, for that machine, then why are we even discussing about this issue of rent? Just because this asset is big, someone feels that we should recognize rent expense. Because if we were somewhere else, we would be paying rent. So let's use this rent expense to reduce our taxable profits. And when we reduce our taxable profits, we pay less taxes. If that is the approach, stop before KRA comes for you. But I have some good news for you. It is not all that bad. If you own an asset, if you own this building, the only expense that you are not allowed by law to recognize is the rent expense. But any repair and maintenance expenses that you incur, plumbing, electrical, carpentry, masonry, all those, maybe repairing a roof, all those are expenses that your company is allowed to recognize and deduct before paying taxes. Insurance cost, you have to insure your building. Land rents, all those you have are valid expenses. But what is not valid is the rent expense. And to make the deal better for you, the government of Kenya recognizes that this building will not live forever, will not exist forever. It has an economic lifespan. And this one is considered to be 40 years. So what is that good news? Or what makes that to be a piece of good news? It's because the government allows for depreciation cost of that property, which is referred as capital allowances. So every year you recognize as an expense 2.5% of the value of that building. You deduct it from your taxable profits, from your taxable income. Let's assume that this building is worth 100 million. Then 2.5% of 100 million is 2.5 million. So every year, instead of recognizing rent as an expense, you will be recognizing capital deductions of 2.5 million, and that will help reduce your taxable profits. If that is very clear, so this is what you need to do before KRA comes for you. Review all your financial statements and check how was rent recognized. If you own that building that you occupy and rent was recognized, correct that mistake before KRA audits. And also ensure every other expense that your company recognizes and deducts from the taxable income, it must have been paid to a third party. So that every expense, every transaction has a cost to one party and is recognized as an income to another party. So when you do that, you will ensure that you avoid unnecessary price tax audits by KRA, which end up draining your business and complicating the cash flows of your business. If you want your business to survive and more importantly to thrive, always do the right thing. Do not recognize expenses that are not justifiable, that you did not pay to a third party. And every other time you make a payment to a third party for all expenses, ensure that you demand an ITIMS receipt, because At the end of this year, 2025, KRA will not recognize any expense that is not supported by a valid eTIMS receipt. When you know better, you do better. And that's what I expect you to do to continue protecting your business, to continue protecting your profits, and more importantly, to continue protecting the peace of your mind.